Hello everyone, welcome back. This is Emmanuel Odogu on this channel, MRS Trade. So guys, for this very short analysis video, we're going to look at one of my trading strategies that I've always been using, and of course it has been so profitable, and of course I want to share it here with you. Okay, so guys, if you're joining us for the first time, please do wait to subscribe, like this video, share. You can equally download it and of course give it to your friends that have been struggling in trading so that they can learn this new strategy and start using it for themselves. So without much wasting of time, let's dive right in. Okay, once again, this is Emmanuel, and of course, this is MRX Trade. Okay, so the strategy is MACD BOS, MACD BOS. So, of course, you know MACD is moving average convergence divergence. Then, of course, the BOS is break of structure. So, we are going to be combining a market structure with this particular MACD intraday strategy. So, MACD itself is a momentum indicator. A momentum indicator shows you the momentum of the market. So it tells you who is actively driving the market with an impulse to the downside or impulse to the upside. Okay. So MACD, so this strategy, we are going to be looking at it in terms of an intraday perspective. That means a day trading perspective. So you're going to use this strategy for scalping. You can scalp with this strategy. By scalp, I mean short trade. Okay. So scalping is defined by maybe the length of the trade. Say you place a trade and that trade lasts for uh 15, 20, 30 minutes, even 1 hour, 2 hours is called scalping. It's also defined by the amount of pips you're looking forward to take on the market. Okay, so if you're making 10 pips, 20 pips, 30 pips, is also scalping. So this strategy is your best bet if you're looking at for such amount of pips on the market. Okay, so let's dive right into it. So let me start by explaining what the MACD does. Then we'll look at the break of structure aspect of it. So we are combining the MACD as an indicator, as a momentum indicator, also an oscillator. So being a momentum indicator, it can show you the momentum of the market. Being an oscillator, of course, it can show you where the market is reversing. Okay, so quickly, for the MACD right here, as you can see, this is the MACD. Okay, so you're just going to use your default setting. Okay, it's the default setting you will use for the MACD. So of course, I know you can do this by yourself. So you just apply the MACD to your chart. So you can do this on the phone. You can also do it on the laptop. The same thing. So you apply the MACD to your chart, right? So it looks like this. So simply put, these bars are called histogram. These bars are called histogram. Okay, so the histogram can either be above or below. So MACD has a dividing line, a middle line called the zero line. Okay, so if the histogram are built above the zero line, it shows a buy momentum. Buyers are in control of the market, as you can see. So if the bars switch towards the downside, it shows a selling momentum. So sellers have the dominant force. Okay, so that's what you do. So that's for the MACD. That's how you use the MACD. Then of course we have this MACD line here. You can call it a signal line. Okay, a simple moving average line. So to enter your trade using the MACD, you don't really need this line. So you just, on the MACD, you only need the bar to switch from the above the zero line to below the zero line. You now look forward to sell, or switch from below the zero line to above the zero line, then you look forward for a buy, like this case. So it switches from below to above, you look forward for a buy. So in closing your trade, for if you are scalping, that is where you need this MACD simple moving average line here, the signal line. So that means if you place a buy because the MACD switched from this below the zero line to above the zero line, so you'll be looking forward to close your trade because you're doing scalping, intraday trading, when the bars falls below the signal line. As you can see here, the bar falls below the signal line. So an example would be you place a buy here, then of course you are exiting the market at this point. So that would be you just doing what we call a scalping trading or an intraday trading. So I think this explanation is only for the MACD. Then of course on the main chart we have the moving average. So you just put a simple moving average of or 50, right? 50 period simple moving average. So simply put, on this 50 period moving average, if the candlesticks are found above the moving average, that is a buy signal. Okay, that's a buy momentum. If they are found below, that's a sell momentum. So over here, don't forget this is MACD BOS. So what I'm explaining right now is I'm explaining the MACD, right? Then of course after the MACD, then when the MACD and the moving average rather, then after that we cannot switch over to the break of structure, the market structure aspect of it, which is the most important aspect of the strategy. Okay, remember we said MACD is a momentum indicator. So momentum can tell you the pressure of the market, right? The force of the market. So, and that force can be likened to the trend. So, MACD is a very powerful indicator, right? So, it can be likened to the trend. Of course, that is why we now have the moving average here to tell us the trend. Okay, so if the candlesticks are found above the moving average, upward trend, simply put, if they are found below the moving average, downward trend. Okay, so I think I've been able to explain the MACD and also the moving average. Okay, so an example would be you wait until the candlestick crosses above the moving average by signal, then you trace it from that particular candle down, right? Once the MACD histogram, these blue bars have started forming above the zero line, of course you can take a buy there, put your stop loss just below the low, and then of course target 2 arrow. Okay, or even 3 arrow. By 2 hour I mean you target 2 times, your take profit becomes 2 times of your stop loss, or times 2 of your stop loss. That's what I mean. Or if you're doing the normal uh scalping that this strategy is meant for, you only close your trade somewhere around here. So let's say you place a trade somewhere around here, right? So you only close your trade, so that means you can take this much profit, as you can see. But we are doing this is on H4 time frame. Okay, I'll also drop down to a much lower time frame so that you can see it. So you can use this strategy on H4 if you want to stay longer on the market. You can also use it on 15 minutes if you're doing intraday trading, or even 30 minutes, or even 1 hour. Okay, so somewhere around there is where your trade should close, where uh, the histogram line falls just below the signal line. So somewhere around there is where you close your trade when this red candlestick start reducing the price to the downside. Okay, now so this explanation is for the MACD and the moving average. So let's talk about market structure here. Okay, so let's look at the most recent price action, as you can see here. So you will believe me, the market have shifted to the downside. So market structure is the most important aspect of this strategy. Please, not just the MACD and the moving average. Why? Market structure is you understanding, is you looking at the chart for what it is and trying to understand what the market is trying to communicate to you. I call it the language of financial market. So as the chart is moving, traders are buying and selling, the chart is moving up and down. Now it is communicating to us, if you understand market structure, the structures the market is building is communicating to you, is telling you whether, hey, I've started going up, I'm losing momentum, I've started coming down. So it's doing that by the highs and the lows. Okay, by the highs and the lows. So the market printing a higher high, it shows that the structure is breaking to the upside. The market printing a lower high, a lower low rather, it shows that the structure is breaking to the downside, of course, downward momentum. So simply put, if the market breaks structures to the upside, upward momentum, breaks structures to the downside, downward momentum. All right, then. So this is what I mean. So let's say the market impulse to the upside, it forms a high. Then, of course, the retracement to the downside, it forms a low. The next time it impulse again to the upside to form a much. Now watch this. The next time it's going up, it traded above this high. So the market trading above the previous high is what we call break of structure. Okay, of course, the market also trading below the previous low is also break of structure. Okay, so the first one is break of structure, the market is moving upward momentum. The other one is break of structure, the market is moving downward momentum. Okay, so this is break of structure to the upside, which means we should be thinking about buying. It supports the buy signal, and of course, it retraces to the downside again. Then, of course, it impulse again to the upside, trading above this high. Okay, so this is what we call upward momentum. The market is breaking structures to the upside. Bullish structure like this, if like an upward trade, the market only keeps trading above the highs, above the highs. Okay. Then of course the next thing we saw here is the market now traded below the low to form a new low. Okay, so let's just use this one. This is how low the market came, right? So the market traded below the low to form a new low, right? So trading below the low, it means the momentum have shifted to the downside. Okay, so that's also a break of structure now to the downside. So we call that a shift in the market structure shift. That's MSS. Okay, now since you have shifted to the downside, we'll now start looking for signal, right? Trading signal, and that will be a sell signal. Okay, so since we have shifted to the downside, remember, because we are in this strategy is called MACD BOS. Okay, break of structure, MACD break of structure. So we are combining the MACD uh, strategy with the break of structure. Okay, that's what we're doing. So because of we have shifted to the downside, we'll start looking for sell signal. Okay, because of we have shifted to the downside, we start looking for sell signal. Now that we have shifted to the downside, immediately your eyes will just come down to the MACD and see. Now that we have shifted to the downside, so if you trace it from here, you will notice the MACD bars has already started building below the zero line, but as at that time we have not shifted. Okay, so somewhere here it has already we have already done the break of structure, as you can see, but somewhere here the candlestick was still found above the moving average. Okay, so yes, somewhere this low, right? So we have already shifted to the downside, as you can see, because we have done the break of structure. By that I mean the market have traded. Now please, when you hear me say break of structure, I mean the market have traded below this low. Okay, that's what I mean. We have traded below this low, so that's a shift to the downside. Okay, so now that we have experienced a shift to the downside, we'll now start looking for sell opportunity. Remember, this is on H4 time frame. I will also do this on a much lower time frame, okay, so that you can get real value for yourself. All right, so the histogram has started building below the zero line, which is a sell signal. Then, of course, over here, the candlestick, as you can see, the candlestick has started printing below the 50 period moving average. Okay, so we're already seeing the sell signal, and of course, you may want to start taking your sell trade. But remember, for the break of structure aspect of it, so we will need a retracement to the upside. So this is the retracement. So after the retracement, of course, we are sure that the market will not target this new recent low. Okay, so this is the new recent low. The market will not target this low. So somewhere around here we can. So this is the new recent low, and we expect the market to target this low. Okay, this is new recent low. The market should be able to target this low, and of course it did, as you can see here. Let me zoom in so that you can see. All right, guys. So, and of course, the market targeted this low. Okay, so somewhere on this particular candle, right, one can start taking sells, right, and you put your stop loss above the previous high, and of course, you now target your times two of that stop loss, as the case may be. Okay. So as you can see, if you had done that, of course, you'd have been on this much profit. Okay, let's look at this. That is around what date was that? 25th of July 2024. From that 25th to today, the 1st of August, as you can see, you would have still be on the trade. Why? Because if you're doing this on the higher time frame, of course, you would like to swing the market. Swing the market means you would like to stay longer on the trade. It means that you're going to be doing mechanical trading. It means for those of you that have bigger funds, bigger capital, you can do mechanical trading. You can do swing trading. By that, I mean you can stay on the trade as long as the candlestick or the market is still trading below this 50 period moving average. Okay, so you can stay as long as the market is still trading below this 50 period moving average, and that will be fine. That will be good. Okay, as you can see now. And of course, the MACD histogram, these bars are still printed or still printing below the zero line. So that's how you can use this strategy, guys. Now let me change to a trade I place so that you can see this for yourself. So all of this I did is on JPUSD. Let me go to Euro USD. Okay, so this is a trade I actually took, as you can see. This is a trade I actually took, right? So I entered like three position, but I was able to protect profit on one, and of course the market have knocked me out on that one in profit. So I think the market has given me another opportunity to enter more. Okay, Okay, so but then let me explain again this same strategy for the second time. Remember, education is powered by repetition. Okay, remember, it is not just MACD you are using to trade, right? It's not just the moving average. You also combining it with break of structure, BOS, market structure. Very important. Now let's look at this structure here. For example, now I'm doing this on 15 minutes time frame. The previous one was on H4 time frame. Now on 15 minutes time frame. So quickly, now look at this structure, right? So we traded to the downside, right? So this is the low. Then of course, before that low, we had already traded to the upside, right? Okay, so we traded to the downside. Then of course we traded much higher to take out this high to form a new high. So that means the pressure is upward, right? Because we have traded to the upside. Okay, now follow me. Now remember, this is the low that bats or that took out this high to form a new high. So we had the market moving downward forcefully to trade below this low to form a new low. So the market trading below this low means we have shifted to the downside. So shifted to the downside means we can now start looking for opportunities to place a sell trade, right? We have traded below this low to form a new low. Now, if we have traded below this low to form a new low, right, we'll start looking for opportunity to place a sell trade. But we'll not do that until the MACD confirms it for us. Remember, this is on 15 minutes time frame. We'll not do that until the MACD confirms it for us. And of course, the market start trading below our 50 period moving average. Okay. So of course, from the knowledge of break of structure, anytime you break structure, the market normally retraces, right? So that is the market offering premium price for a sell or discounted price for a buy. So this is the market retracing, right? So the market retraced to this level. Remember, since we have done break of structure to the downside, we are still looking for opportunities to sell. Don't forget that, because the last break of structure, please, this break of structure means momentum. Okay, so the last momentum we saw is to the downside, right? So until we trade above this high, then of course we are not seeing momentum to the upside. But for now, we are still seeing momentum to the downside. So that momentum to the downside, we still have that in mind. We are only looking forward to MACD to confirm it, and of course the moving average to also confirm it. By MACD confirming means MACD should start printing histogram, these bars below the zero line, and of course the candlestick should not come below the 50 period moving average. Okay, so we retraced to the upside, as you can see there, having retraced to the upside, of course. So the next thing we are looking for, remember, we already, for the break of structure, has already confirmed us a sell signal, right? So it has confirmed us a sell signal already, but we're only looking for MACD and moving average to confirm it. Guys, this strategy is one of the best, of course, for intraday trading. You don't want to miss this. You want to watch it over and over again and get real value for yourself and start using it to trade. And of course, share your testimony with me, right? So this is YouTube, so you can chat me up, you can equally drop your comment, please. If you have gotten real value to this particular moment, please don't forget to subscribe to this channel, and of course like this video, share it with your friend, and of course I'll be waiting for you at the comment section. Okay, so we are looking for, now this is the retracement, guys. So this is how much it retraced. So you can see how many times the market tested this high. Okay, so this is what they call resistance, right? This is what is commonly called resistance. So the market tested this high several times, and I'm still looking for sell opportunity. When the market was testing this high the first time, of course you can see at this level we are trading above the 50 period moving average. Okay, but I'm still looking for sell opportunity. I will not take a buy this level the second time, the third time, the fourth time. I'm still looking for a sell opportunity. I'll not take a buy. Okay. Now, immediately the market traded below my 50 period. Come on, guys. This is the point I'll now start looking for sell condition. At this point, the market traded below my 50 period moving average. Remember, BOS, the market structure, has already confirmed that we are going downward, that we are selling. No, it's not that I am going downward. The market is going downward. All right, I'll never go down. Okay, the market is going downward. So somewhere around here, I'll start looking for opportunities to sell. Okay. So once the candlestick start printing, don't forget, guys, this is let me zoom into the area. This is on 15 minutes time frame. Once the candlestick start printing bearish candlestick below the moving average, you now trace it down to the MACD. The MACD has started printing histogram, the bars below below the zero line, of course you now start entering sell. As you can see, I've already entered 3 positions. The market retraced a little bit, close one of them. So as I'm still on 2 positions. So still on this, I would still like to increase my position, guys. Come on, guys. I would like to increase my position. Let me enter again. This another 0.05. So I've been able to enter another one. And of course, I'll be targeting this low. So let me reduce the zoom a little bit. So look at this low. So you can target this low, right? You can target this low. You can target this other low, okay? Or you can close your trade as soon as, the histogram start printing below this simple moving average here, the signal line, okay? So or you can use the market structure, right? If you want to stay long on the trade, or you can stay long on the trade as long as the candlesticks are still found or built below your 50 period moving average. Okay, so guys, so I'll drag this. So this is my take profit somewhere around here. So let me just keep it at maybe this one is $10. This other one is $7, $17. Take profit. This other one is how much? $6. Okay, $10, $10, $17, 17.5, and then we have $6. Okay, okay. So that's somewhere around $23. So $20 in our Nigerian naira is somewhere above it's somewhere close to 40,000 naira, if I'm not mistaken, depending on the exchange rate, or somewhere around 35,000 naira. So a trade that gives you 35,000 naira for a single day using this powerful MACD BOS strategy is not a bad trade, okay? It's not a bad day, okay? So and of course I know you now, you can manage 35,000 naira in a day for a small account, okay? So guys, this is a little update based on the strategy, the MACD boss. That's the MACD combined with the breakup structure, right? So this is a little update on that. So you remember these trades that were placed, the first one on Euro US, the second one, and of course the third one during the analysis. The third one was 0.05, as you can see, right? So the market has actually moved uh, downward, right? So from that time we placed a trade. So it was around this place we placed a trade, and of course it's heading towards our take profit, as you can see. So one thing you can do in using this strategy is, once you've seen good profit, you can start protecting your profit as small as possible, because it's actually an intraday perspective, okay? Because it's heading towards this low, right? So once it takes out this low, we'll be expecting a retracement. So for this strategy, now your stop loss should be found above the recent high. So this is where your stop loss can be. Your stop loss can be just above the 50 period moving average, or above any swing high or swing low, recent swing high, swing low before where you place your trade. So your stop loss can be here, and of course you take profits as we have already set it, okay? So once you start seeing profit, you can start adjusting your stop loss from the risk zone to the profit zone, so that you can start protecting your trade. Once you protect your trade, the trade is now a risk-free trade. Okay, guys. So when we actually analyze this with this strategy, we're just on the market was just starting off, and of course, right now we have seen some amount of movement. Don't forget, this strategy is for intraday traders, for day traders. So of course, you can start using it and start making money for yourself. Alright guys, so as you can see, this is further progress of the trade we took using MACD BOS. Okay, so you remember we were able to take three position on Euro USD, because we saw a break of structure to the downside. We waited for the market to offer premium prices. Of course, it was actually a sell momentum, but we're not jumping with a sell, because we are not only using the break of structure to trade, we're also combining it with our MACD momentum indicator, and of course with our moving average trend indicator. Okay, so we waited until the price got to this retracement level, even though we are still looking for sell opportunity, but we still waited until the candlestick falls below my 50 period moving average, and of course that combined with the MACD histogram start printing below the zero line. So we took the trade here, right? So we took first position, second position. Of course, during the video I took this third position, 0.05. As you can see, the market has even moved down even further, as you can see here. So and at this point you may start protecting some of your profit. Okay, so that the trade will run on risk free trade. Protecting your profits, once you have your stop loss, you adjust your stop loss, okay, to the profit zone. Once you adjust your stop loss to the profit zone, then you are protecting your profit. Okay, so guys, give this video a thumbs up. Okay, please do well to subscribe, also share this video to your friends. Now, you may want to watch it over and over again so that you get full understanding. If there's need to reach me, please drop your comment in the comment section, and of course you can still call me on the phone. Okay, so if there's any challenges using this strategy is also available for the mobile phone. Okay, you can still use the same strategy on the mobile phone even. So guys, thank you very much. So this is how we're going to wrap it up so that we don't keep the video too long, so that you can watch it and watch it over again. Remember, this is MRX trade, and of course this is Emmanuel Dogo here, and of course this strategy is MACD BOS. That means MACD break of structure, right? It's one of the strategies you can use for an intraday perspective. So guys, thank you very much. See you on the next one. Bye for now.